Oh, hello. How's it going, Publius?
It's going, Dumpling. It's a Friday? Crazy, huh? Feels like I don't even know what day it feels like. It's the week has been a blur though, that's for sure.
Yeah. It's been a busy week. That's very true.
How are you, Dumpling?
I'm doing good. I'm doing good. I opened a bottle of wine and I'm letting it breathe the next hour. Then I'm gonna crack into it.
How about that? Uh nice, nice. I think whoa, is there a Diamond Bean FT in the chat? Look at that. Whoa, we've got a celeb in town, everybody.
I'm looking for it. I'm looking for it.
Scott C. Nice Bean FT, brother.
There it is. There it is.
Wow. The diamond. Too hot. The winter bean FT diamond, no less. All right, should we get started?
Time to get started. All right, everyone. So this is a town hall path forward AMA. So all questions are welcome. You can raise your hand. You can post them in the classroom chat. And if for some reason you can't talk, then leave and come back, because sometimes that we have that issue. But yeah, I'll check the chat here. Just gonna say questions below.
Oh my god, we have a second diamond bean FT in the chat. What is going on tonight? The diamond hands are here, I guess. Bean Sama, shout out.
Alrighty, I think there was one that someone had written in, so I'm gonna start with that one. Okay, it's kind of a long one, so bear with me. Publius and the rest of the team. While we are heading towards, at least according to the latest rumors, a possibly eye-watering refinance event of Beanstalk, I have a philosophical question about the envisioned end state of the Beanstalk protocol. What does Beanstalk look like when it is, quote, done? Will it ever be done? Can it be done? Or is it supposed to be alive, growing, and mutating? Or will it go the way of Bitcoin and at some point fossilize, become a primitive, and sink into the DeFi bedrock? The reason I'm asking is, of course, the now common understanding of the human element as the perpetual source of errors in any system.
It's a wonderful philosophical question. From our perspective, the goal has always been towards to have Beanstalk trend towards the immutable dinosaur-like primitive that it's very hard to change. The thought behind a 50% stock majority to change a BIP, was that it would be particularly difficult to acquire a 50% majority to make changes as the system develops. So at a high level, certainly think that the goal would be for the system to become less and less changing, and in theory, less and less changeable over time. What that timeline might look like is unclear, but at a high level, would say from our perspective, you can kind of get to a place where there's things that can be modularly changed, like what assets are whitelisted in the silo, if that makes sense, without like changes to the model itself, like how the weather is changed. So would put the goal for the final state of Beanstalk, if you will, to be one where nothing needs to change at the model level, but it's very easy to integrate and interoperate with Beanstalk. So that would be probably the place where the rubber meets the road a little bit. But that I think that does a pretty good job of covering it.
Got it. Okay. Asabinia. Once the new podline reaches a certain length, could buying from the farmer's market become competitive with participating in the barn raise?
Once the barn pod line becomes Well, the short answer is, in theory, the pods in the new pod line are effectively the same from a buyer's perspective under the current plan as the pods in the old pod line. And so one way to look at it is that there's competition to acquire pods on the pod line from the pod marketplace. But the other way to look at it is if you look at the pricing of the pods on the pod marketplace prior to the attack, that may be a good way to reference how to price pods in the new pod line. Not sure which direction this relationship trends, if that makes sense, but it would probably think that it trends towards pricing the new pod line effectively, particularly given that while whenever Beanstalk restarts, you'll be able to buy pods on the marketplace again in theory. This is really a limited time opportunity to acquire large amounts of pods, which, you know, if you look at the historical data on the pod marketplace, as cool as it was, there was only something like $4 million of value exchanged, I think. And in short, maybe 5. I'm looking at the Dune dashboard. I think now it says 5 prior to the attack. So, you know, this is going to be significantly more volume for pods than has been the case historically for Beanstalk. So, unclear how that will trend, but just based on the size of the pod marketplace, don't think it would have too much an effect in a downward way on demand for the fundraiser.
Got it. Yeah. Sync coming in clutch, 5.5 million. Sync. Okay, from Warthog, looking at the snapshot vote for Halborn, it says that they would begin an audit May 9th. Would the protocol be restarted on May 9th, or were we voting for the audit to be completed before restarting Beanstalk? And how long would that take?
So it's an open question as to whether upon completion of the fundraiser, which won't even end until after May 9th, I believe. I think it's supposed to end on the 12th. Beanstalk could be restarted after that. The timing of the audits are, assuming that there's a Halborn audit, they originally quoted us 8 weeks, which would start May 9th and would end very beginning of July. We told them we'd prefer it to be a little bit faster than that, such that hopefully the end of the Halborn audit would coincide with the end of the Trail of Bits audit, which is scheduled for 3 weeks starting June 2nd. And so they basically told us, you know, they're not going to rush the process in any way, which we said was fabulous, but they're going to let their engineers, though, that if it can be done by the end of June, that would be preferred. And so the thought is, from our perspective at least, you know, there should be a DAO vote on whether to resume Beanstalk prior to the completion of both of those audits or to wait, particularly given that at the margin the fundraiser isn't going to be completed until May 12th under the current plan. We're talking about at the margin maybe 6 or 7 weeks of additional wait time. That is something that DAO is ultimately going to have to vote on. I think from our perspective, given what's transpired, we're probably inclined to be much more risk averse and wait for both the Trail of Bits and the Halborn audit to be complete prior to restarting the protocol. But ultimately, it'll probably be a snapshot vote for the DAO to vote on upon completion of the fundraiser.
Okay, great. And this might be a good time. Folks can read it. I see Warthog did a post to it. But do you want to just give a brief overview of the Halborn snapshot, Publius?
So, in short, Halborn is a very highly recommended auditing firm, smart contract auditing firm, excuse me. And in short, they have pretty good experience dealing with protocols post hack, like Thorchain and BadgerFi. And in short, they seem totally willing and able to dive right in. They made an exception to their normal calendar. They said they're booking projects out in July and August, and they were willing to make time for Beanstalk, which is very nice. And they quoted us what we thought was very reasonable, given the initial audit costs 200,000 USDC. This seems like a very reasonable quote. It's the same amount. And in short, from our perspective at this point, the more security eyes looking at Beanstalk, the better. So, to me, it's a no-brainer.
Okay, AJ says, we're doing this raise on the blockchain, right? Any vulnerabilities there?
So, that's actually a great question, AJ. The thought here is to have on-chain bidding and participation, but the actual ordering and distribution of the pods will be done when Beanstalk resumes. And the thought currently is to have all of the data from the bidding process indexed via a subgraph, and therefore there will be the on-chain verifiability that everything is happening accurately, the convenience of the subgraph, and then there's no additional risk of building any of this directly on-chain on short notice, in effect. So that's the concept, and that will also facilitate, because there will be a period of time between the end of the fundraiser and when Beanstalk is resumed, any potential issues, although again, because of the simple structure of it, you wouldn't expect there to be too much complexity. Any issues could be resolved prior to Beanstalk actually resuming. So I feel like from a risk perspective, this is a relatively low risk process. Now, when it comes to custodying the funds will be custodied by a multisig wallet. In theory, it's the same multisig wallet that Beanstalk is going to be custodied by going forward, which will be I think a 9-signature wallet was what was decided on. I think, in short, that's a pretty secure process, right? The contract will be owned by a multisig, and then upon completion of the fundraiser, will immediately transfer funds to Beanstalk, which is again doesn't have any governance facet now, so there's no risk of the same attack happening or a similar attack happening at the moment, and Beanstalk is going to be also governed by that community multisig going forward. So that's the thought around security for the fundraise.
Okay, great. And can you give any details on that? Warthog is kind of asking about the multisig and the BIP voting process going forward. Can you discuss, any discussions that are happening around that and where we are on that front?
So, in short, this is something that the DAO needs to agree on as some sort of process going forward. But what would make sense to me would be to have, a snapshot for BIPs following the same process or the same rule concept that what Beanstalk was following prior. And in effect, using Snapshot, I guess there would be slight changes because Snapshot doesn't have the updating of stock over time, for example. So there would be minor changes to just the accounting at the micro level. But the thought would be to have a Snapshot be where the governance votes take place for the time being, and then the multisig would be responsible for executing the will of the DAO as demonstrated on Snapshot, which is suboptimal, but still pretty decentralized in the grand scheme of things.
Okay. Any more info regarding capital? Are you actively looking for capital or just waiting for the fundraiser to see?
Can you the
Are you actively looking for capital?
I see the question. So, it's very hard to comment on capital because again, we've never once asked anyone for a dollar amount per se, because anyone can participate, anyone can do whatever they want. Basically, there's no term sheet or safe or anything. It's just an interaction with Beanstalk. But at the same time, we're doing everything we can to make sure that people are aware of what's going on. And there are lots of capital that's interested in talking to us and asking questions. And we've been on plenty of calls. So I have no sense of what that's going to turn into in terms of participation in the barn raise. But yes, that's a focus at the moment.
Okay. From our friend, the Black Knight. Are there discussions to leverage services like Halborn ongoing to address a security presence on the project instead of the pressure of onboarding a security consultant on the team?
Don't think this is an instead of. Think it should be both. So the concept is to, upon completion of the initial audits from Trail of Bits and Halborn, have them do continuous audits. Halborn seems particularly well suited for it given their structure and flexibility. So, but don't think that precludes Beanstalk Farms or Beanstalk from trying to acquire full-time security people as well.
Okay. From IPO and Chill, who, if anyone, would be able to submit and execute arbitrary code to the new Beanstalk contract? Are there other protections that exist to make sure that funds cannot be arbitrarily moved from the Beanstalk pools elsewhere?
So there's two things. One, the Multisig that owns Beanstalk at this point would be the only wallet that could execute arbitrary code on Beanstalk. And that would require however many signatures are on that contract. Now, the other thing is, are there any other protections that exist to make sure funds cannot be arbitrarily moved from the Beanstalk pools elsewhere? There's a lot of thought around how best to re-architect Beanstalk such that, for example, different siloed assets may be totally free from the control of Beanstalk per se. Now, that does come with additional frictions in the system, like with the example of the curve pool we were talking about a couple days ago. But in short, everything is on the table to try to figure out how to maximally secure the contracts going forward. And the hope is to chat extensively with the audit firms once they're looking at Beanstalk to figure out how to minimize risk across the board.
Okay, great. Casper, I think I remember you coming up last night. Welcome back.
Yeah, hey, how's it going?
Pretty good, pretty good. Okay, we can hear you. Go ahead.
Cool. So my question is kind of broader, just stepping back a bit. Like, I'm curious if there are any major changes that you would consider before restarting, hitting the restart button again, because in a way, you kind of have an edit button here where if there were, I guess, like parts of the system that weren't necessarily like, at least like, the ones that were most on your mind, if there were major fundamental changes that you would make to them, would there potentially be like at least a discussion around those changes? And like, might not be something you can do just in like a BIP proposal, but now that you have a restart button, like, are there things that you're considering?
Really appreciate that question, Casper, and recognize that this is an opportunity for everyone to kind of take a big step back and think bigger picture. Is there anything that might make sense to change at a high level? And I think from a smart contract architecture perspective, there might be a little bit to be said there because of obviously the weaknesses that existed in the current architecture. But from an economics perspective, which is I think where your question was coming from primarily, in short, no. And one of the, I don't know if you want to call it a tragedy or maybe it was, just this is the result of Beanstalk and its economic model really being somewhat ironed out to a large extent. The economics, and I would make the argument there's lots of minor tweaks that could be proposed, like how the weather changes and how demand for soil is measured could be improved further over time. And there's lots of little tweaks that I'm sure over time the DAO would have gotten around to making on Beanstalk as more data came in. But at like a high level, felt very, very strong about the state of Beanstalk, and there really wouldn't be anything that at a macro level I'd be voting to change. Now, it is worth just noting, particularly over the past couple of months, as Beanstalk has really entered the point in time where it's worth considering how it compares to all of the other stablecoins in earnest. I think, we've really. I'll just speak for myself. I've tried to take a real deep look into every stablecoin model that's out there, and I haven't looked at all of them. Obviously, like that neutrino one that happened last week, I was like, I'd never heard of that one. But the idea is you look at all of the other major successful stablecoin models, and I feel like Beanstalk has the best one. So, that's not to say that it can't be improved, but at a macro level, don't think that there are any major structural changes that need to be made in the model. Think that instead, the goal is to just get the model back in a place where it can continue to run, limit as much as possible any attack vectors for things like this to ever happen again, and then over time continue to tweak and prune and improve slowly and steadily, but didn't really feel like there was at this point in time anything really crazy that needed to be changed. Like you look at BIP 9, I think we would point to BIP 9 as something really substantive in how the model functions that has had a really profound effect on the system. But in short, don't think that there were too many of those changes that needed to be made that are really substantive at this point in time. It was more like, what is convert, right? Generalized convert, generalized minting. Those are all bells and whistles. That's not substantive changes to the model. So, hopefully that answers your question, Casper.
Yeah, it makes sense. I appreciate the long-winded answer, and I think another thing that is like particularly strong about this protocol is was the on-chain governance piece. Like, I think that is needed for these sorts of systems.
Too, man. Me too.
Yeah, it's all about tweaking and like experimenting, a few basis points this way and a few basis points back, and like understanding how receptive the market is to those tweaks. And then like slowly we can make a cool system. The other thing that I would say is like, in that respect, like there could be potentially a way where like you still have the on-chain governance piece, but then maybe we like redeploy Beanstalk on a test net, and we can like use emissions to incentivize users to use the testnet contracts to like effectively make sure that there's no bugs, and maybe like use emissions as a cost for security, which is not really something we've seen, but given the backup with audits and stuff, could make sense.
So in theory, really like that, but in practice, I think any on-chain governance going forward cannot be live without an immense amount of auditing and testing. And while it would certainly be great, really great to not have to forfeit the on-chain governance for the time being, I think that's just a pill we're all going to have to swallow, for better or worse. So, but agree with you 100% that in the long run, Beanstalk needs on-chain governance.
For sure. Yeah, that's all I got. Thank you, guys.
Cool. Thanks, Casper. Okay. We're moving on to Hammer's question. Hi, thanks for doing these. I have a question about the barn raise and the weather upon restart. I believe the current FAQ suggests that the barn raise weather will go from 20% to roughly 400% over the sale period. Upon restart, weather to the Podline will return to where it was before the exploit, which was more like 5,000%. I think all of us want to maximize the barn raise sales, but I'm concerned about the possibility of 5,000% pods to buy, even after waiting to see how everything shakes out. That can look like a more attractive offer, as does buying LP post restart. Further, consider that any downscaling from an incomplete barn raise, that pod line would actually be much shorter than it is, and might not look significantly longer than the barn raise pod line. In terms of making the barn raise look like actually a great new deal for investors, I want to be clear that this is the best deal that you can get in for beans in the foreseeable future. Would we consider raising the barn raise weather or scaling back the weather post restart to push investment in that direction?
What a great question. Lot of thoughts here. To me, it would seem like this concept that it's better to wait to lend to Beanstalk until after the barn raiser is complete because you could receive a higher weather is predicated on the concept that there will be soil after the barn raiser. And if we look at the state of Beanstalk over the past month and a half, there hasn't really been any soil available. There's been, the price has been over 1, and there's been minimal soil available. Now, the main difference in this case is that there's 77 million soil available. In practice, Beanstalk cannot issue 77 million pods at a 58x. That would not be sustainable. So just in practice, don't think you can really raise the weather. You could raise it slightly to 800%, 900%, but it's hard for Beanstalk to offer a 20x on $70 million or $77 million. That would really increase the debt level of the system dramatically. And from the perspective of waiting to try to get the 5,800 or potentially lowering the weather after the restart or at the time of the restart to discourage this incentive, again, I think it goes back to this is predicated on the concept that there will be soil after the reset. And because of the structure of the haircut, where Beanstalk will scale down based on the amount of capital it's able to raise, the thought is that Beanstalk should be in a comparable state to what it was in prior to the attack, but in a scaled down version. And so in effect, just as there was no soil before the attack, would not expect there to be much soil after the attack. And therefore, anyone who's waiting to get a higher weather in practice, think that that's unlikely to be able to happen because it's unlikely that there's going to be a lot of soil, at least under the current parameters proposed. That would be what would appear to be likely. So, I think that would be it.
Publius, can you expand on why you think that would be unlikely to the current parameters?
Well, in short, right prior to the attack, Beanstalk had a clear supply shortage, and there was a lot of minting going on. Now, whenever Beanstalk is restarted, the state of Beanstalk will be scaled by the percentage of the fundraise or the barn raise that is completed. And so the concept is if Beanstalk is only able to recoup 50% of the funds in the barn raise, it will be in the same state it was prior to the attack, but scaled down by 50%. And so under the previous state, there wasn't a lot of soil available, and therefore you wouldn't expect there to be much soil available after the fact either, unless there was a major outflow from the system. But of course, all of the liquid assets in the system prior are now subject to this vesting from the pod line. So there's even less sell pressure than there was prior, if that makes sense.
Yeah, it does. Okay, Hammer's response. I think that's a great point. But A, will outside money understand the limited nature of soil? And B, be true if there's likely a period after the restart? And C, if the pod line is scaled down to be shorter, should the weather scale down with it?
So A, will outside money understand the limited nature of soil? I think that's up to everyone to try to communicate that as best as possible, and we can try to do that as well. But all of the materials that are put out around the barn raiser should probably emphasize that, to your point, Hammer. Will that be true if there's likely a volatile period after the restart? Well, no. If you had a significant period of time where the price was below $1, then there would be soil. But don't think that it's likely that there's going to be a significant outflow in effect because of the structure of the barn raise and the vesting schedule. It's possible, but it just doesn't feel likely based on the price is a function of demand and supply, buyers and sellers. And the current structure is designed such that there are very limited sellers at the start.
And
if the pod line is go ahead, Publius.
Oh, just was going to say, there are pretty much no sellers at the start. Every single bean in Beanstalk will be replaced likely with a, locked vesting bean. And this includes everything from circulating beans to farmable beans to deposited beans to withdrawn beans. And thus, there will be no unlocked beans with the exception of those in the liquidity pool, which will obviously have to be bought to be sold.
Or pods that harvest. But if pods harvest, that means that the price is above $1.
And farmable beans that are minted to the silo.
There you go. So it's not that there's no sell pressure, but it's highly limited. And to answer C, if the pod line is scaled down to be shorter, should the weather scale down with it? That's actually a very interesting thought. I hadn't thought of that, to be honest. It's a great thought. It's a very great thought. I have to consider that a little bit more.
Okay, quick one. When will the vote to unpause Beanstalk be held?
Not sure. Probably sometime after the fundraiser, right? So after the fundraiser is complete, it would make sense for at that point everyone to vote whether to resume or to wait until the audits are complete.
Okay, we have a hand. I'm going to bring up ID on stage. Eddie. Say one more thing. I couldn't hear that. Let me. I'm gonna mute you. Unmute you. Say something now.
Can you guys hear me?
I can now. Okay, great.
Okay, perfect. So yeah, I've recently done kind of a deep dive into the algorithmic and decentralized stablecoin ecosystem, and really liked the tech of Beanstalk and was really sad to kind of see what happened. And it sounds like you guys are going really deep into, different security measures to make sure it doesn't happen again. But there still is that, question of trust. And I was just wondering if you guys were thinking of any other initiatives or strategies to kind of rebuild that trust, or if you think it's just going to be kind of a function of time.
Yeah, I mean, I think there's a lot that can be done to demonstrate that, the people that are working on Beanstalk take security incredibly seriously. But I'm kind of with you that this is going to be a question of time to a large extent. And, there's a Lindy effect that needs to take hold, which has just been reset to basically zero. So, I think a lot of it is probably just time.
Yeah, no, that makes sense. And luckily, crypto moves fast. And I think a project with good fundamentals like this one will come back pretty quickly. The other question that I had was, do you see, I know there's some issues with a collateral backing, just being, not as capital efficient and also kind of limiting supply growth. But do you see any way to integrate a collateral component to the stablecoin, and do you see that as a potential integration, or are you really kind of staying away from something like that?
Well, so it's easy to see a million different ways to make it possible to have some sort of partial collateralization or a treasury or some partial backing, but would be fervently against it. As an opinion, because I think that there are two reasons. One, philosophically, the main thing that the market is trusting by using Beans is the credit of Beanstalk. Think that anything you're hiding behind in terms of, oh, well, there's a little reserve, or oh, there's an insurance plan, or oh, there's this, that the only thing that can really do, although I guess in circumstances like this, you may wish you had some sort of cash on the side. In reality, the only thing that can do is change the structure of the market, if that makes sense, such that people can look at Beanstalk and say, well, whatever I previously believed in Beans for, I no longer believe in them. And so therefore, if it really exposes the protocol to a Soros-style attack, where it's like you drain the reserves, now there's a major chance that the market loses total faith in the protocol, if that makes sense. So at a high level, feel like it's much better from a behavioral perspective for Beanstalk to only be dependent on its collateral, not its credit, if that makes sense.
Right. Yeah, no, that was helpful. That kind of made me think of that in a different way, where collateral is almost not really solving the problem here. So thanks for that. And that's all I have.
Yeah, and the second thing, though, is anytime you have collateral, there is a cost associated with locking up that collateral. So there's rent introduced for that, and there's no need to introduce inefficiencies to the system.
Where would the rent be coming from?
In short, if you have to lock up $1 billion to create, as collateral, there's opportunity cost associated with locking up that collateral, if that makes sense.
Right.
Like the rent comes in the form of, well, how would you fund the treasury? Maybe 1% of all Bean mints gets sold on the market for Ethereum or for 3Curve or whatever and put in the treasury. Well, that's going to dramatically slow down growth of the protocol, right? So it's a tax in practice on the users, and it's incredibly inefficient.
Right. Custody is kind of the lowest return possible that you could have on the funds. That makes sense.
Exactly.
Got it. Thank you.
Thank you, sir.
Okay, AJ, I'm going to read your question, but it doesn't make a ton of sense to me. Do you have any liquidity right now? Where is that coming from, and how is it being paid back?
Yeah, I don't understand the question either.
Okay, a couple of comments.
I think you skipped AhuJet above.
Okay. Should there be a minimum barn funds raised? And if not met, would we rather restart the protocol?
So I was thinking about this earlier today. If Beanstalk raised $0, that would be like restarting the protocol. So any bonus on top of that is better than restarting the protocol, in short. So from my perspective, there's no reason to put a minimum in there. It's like better than nothing. Nothing would be restarting the protocol. So better than nothing is better than nothing.
Yeah, I guess that's true. That's an interesting way of looking at it. Okay, bringing up Martek.
Hi, folks. Can you hear me?
Sure can.
Perfect. First of all, many congratulations. This has been a long ride, but covered in a short time. So really appreciate everything. And thank you for listening to community and incorporating some of the suggestions that we shared last time. I think everything looks super. We are all primed up. Of course, as any other project, there'll be hiccups. I have two parts right now. One part is suggestions, a few suggestions that I observe that might help. Second part is questions. Yeah. So I'll probably give a few suggestions first. Some of them I've shared before on the community Discord. So please forgive me if it's a repetition. Yeah. First up is bounty, right? So I know there's a bounty on exploiters that if they return, they get 10% back. My suggestion will be also to have bounty on anybody that catches the exploiters and helps in recovering the funds. That way we can get the entire white hat community, crypto Twitter army.
Dumpling, can you comment on this? Because I thought we were trying to get that up.
Oh, perfect.
This, I think we were discussing 10% plus 10%, right?
I don't know what you're talking about, Dumpling. But I thought that Bean, Ask, and eReal were working on a statement to basically say if you recover the funds, then the 10% offer extends to white hats as well, exactly as Amartek is saying.
I think that they are working on something to that effect. Now, Amartek, were you suggesting? Oh yeah, never. I think someone in the general had suggested a 10% plus 10%, but
why would that make sense?
Yeah, I think 10% is fair enough because anyways, the amount is quite huge, 7-8 million, and that can get all the best brains in the white hat community, crypto Twitter to work on that. And I understand that all our brains are very busy rebuilding this, but I just don't want to drop the ball on this part and don't want to give an easy escape to exploiters, right? So let's have rest of the army work on that while we work on rebuilding this. That was the entire idea. Yeah. So I'm happy to discuss this offline and clear the percentages like 10% and so on, and what's the idea behind it. But just wanted to bring this on top of our priority list as well. Yeah. So that's one. Second suggestion, and I think that's an easy one, but that is more to the UX team, is when this restarts, whenever anybody from the old Bean token holder are withdrawing, there should be a pop-up saying that I understand that there will be a haircut, and only when they click on yes, and I understand, then only the withdrawal takes place. The idea being that there will be a lot of people who have slept on it. They'll come back after 2-3 weeks or 2-3 months and then click on withdraw, and then they will rage all over Twitter that this is dumb, I was never told, and blah, 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 right? So we have to make sure that we manage that aspect as well and do the best we can. So it's a very small UX change, but it will go a long way in managing that kind of stuff. That was the second suggestion. Third suggestion, and I'm not sure this is discussed or not, is related to when we do the fundraising, right? It will be really good if leading up to that or during the bidding process, if there is a calculator or a graph on the website where people can just enter parameters and see what return they can expect. The entire idea being that it creates FOMO when people can start putting in numbers and see how much return they can get and how it works out, rather than just one or two parameters like this will be the weather and this will be this. Because usually when they see the end figure, it's human nature, it creates a little bit more FOMO. So that was third suggestion. And please stop me wherever possible or if I'm going too fast. Yeah. And lastly, the fourth suggestion is
keep going. No one should stop you. You're on a roll.
Thank you, sir. I appreciate that. Fourth suggestion is, I think, a short 2-3 minutes video to explain the simple mechanics of fundraiser, return expected to a complete outsider. So we all speak the same language, right? Pods, soil, beans, harvesting, but a new investor might not speak this language. So just a simple 2-3 minutes, like a whiteboard video, will be very helpful for any outsider to have that, oh, gotcha moment, that now I understand, and now this is what it is. This is a very small investment, but I think will go a long way. So these are a few suggestions I had. Now I'll move to the questions part here, if that is all right.
All right.
Perfect. So questions, these are very simple questions, but I thought over communication is better than under communication. So I'll rather ask and clarify. Yeah. So one is, so for the old LP holders or stock seeds holder, right? As they're going through their vesting period and so on, waiting for full 100% investing, will there be like returns compounded to what is stored in the silo as they wait?
Yes. So the concept is nothing about the interest profile of being in the silo will change whatsoever. Deposited assets will continue to receive farmable beans, and if you farm your farmable beans, then you'll earn the seeds from them will start yielding grown stock, and so on and so forth. There's no change to the seniorage model other than under the proposal, 1/3 of bean mints will go to stockholders as opposed to half.
Very good, very good. And the subsequent follow-up question is that if anybody does, let's say, exits or withdraws early and gets that haircut, does that portion of LP gets redistributed to other holders in the silo?
Yes, to the other people that are vesting. So in effect, you will have a benefit for other people cashing out early, in effect.
So there is a high chance that by the time the 100% of investing happened, a holder might have more than his initial deposit also, right?
Assuming a single person withdraws in advance, that would be the case.
Got it. So there's an incentive for all the old folks to hold because the deposit is growing. If anybody exits, it adds to their deposit. So this is a good mechanics that we want to have it running. Okay, very good. And just last question, and this is a more simplistic one. Has any big VC or firm reached out and shown interest and offered to back up or invest heavily in the fundraise as of now?
There's lots of conversations, but nothing that I'd feel comfortable talking about, if that makes sense. But people seem interested.
Very good, very good. Okay, I'll stop here because I respect the time, but thank you so much for having me again. And these suggestions, I'll type it out and send over as well, just for convenience and ease of reference. Yep.
Epic.
Bartek,
Epic.
Thank you.
We're so lucky to have you. So lucky to have you.
Just sent you a friend request, and also I'm going to be following up. I just sent a couple of DMs out, but I'm going to be following up at our stand-up meeting tomorrow to see where, what the status is on that bounty that you mentioned. Thanks for that.
Thanks a lot. Really appreciate it. Thank you, and keep up the great work. I appreciate that.
Okay, next. What is happening with the 250,000 that went to Ukraine? It's for a great cause, but they didn't want the stolen funds.
It's a great question. I'm not up to speed, honestly. I believe Silo Chad was in touch with them, and they seem like they are inclined to try to get us the money back, but I'm just not involved in that process.
Yeah, I think there were some DMs, a couple of emails, so that's something that I think is in progress, but we don't have any clarity on it just yet. That I've seen either. So, but we'll give updates on that, as we have them. Okay, from IPO and Chill, how many minimum signatures are required on Multisig to sign for contract changes, and how many unique individuals are signatories to that wallet? Lastly, is this a digital wallet?
I don't know what the multisig will end up being. The thought is either 5 of 9, 6 of 9, or 7 of 9. 6 of 9 is probably the most reasonable. So that would be 6 individuals of the 9, I guess. And I don't really know what you mean by is this a digital wallet versus a hardware wallet. I don't understand IPO. I'm sorry.
Well, like most things like Gnosis allow you to use either a hardware wallet or just any Ethereum wallet. It's dependent on the user. Okay, so from Turboy, there was an article that came out today from The Verge that did not seem like good publicity about the flash loan. In general, how has the marketing and media been? Is this something we're actively reaching out to get media attention, or are people reaching out to us, or are these stories being written without our input?
So it seems like there's a ton of different coverage. There's been a lot of outreach. There's been some coordination and trying to answer some questions from some of the media. But in general, haven't been following too much of that. I think for the most part, a lot of the coverage has been reasonable. Did see that Verge article, which felt like was a pretty poor characterization of things, but it is what it is. And there's a lot of stories that are being written without, our input or Beanstalk Farm's input, it would seem.
Yeah, I'm not sure. I think Dumpling, you invited me up.
Yeah, Maud, I just thought if you wanted to comment at all on any of the media.
Yeah, with media and everyone who has reached to us, we always welcome them to our discourse. We're having one every day, and we tell them all to come in, and they can ask their questions and have everything out here in the open. And all of our recordings, anyways, are always on Spotify. We put them on YouTube, so all of this information is out there. And yes, so all of them who have reached out to us, we tell them they're welcome. They're welcome to ask all of their questions on our classes.
Okay, thanks, Maud. From Thirst Cow, what safeguards are being put in place to prevent future attacks to governance?
Well, this is a question we've answered, I feel like 100 times, but I'll answer it again because of how important it is, but we'll answer it a little bit more succinctly. The on-chain governance has been removed entirely. And going forward, Beanstalk will be governed by a community-controlled multisig. And so that, with combined the Halborn and the audits that are scheduled to start imminently or in the next couple of weeks, that should... those are really substantive steps. But don't want to make it seem like we're not taking it seriously. It's just, limited time left in this AMA, and feel like this has been answered a couple times.
Yes, I will mention that this AMA is going 60 minutes, so we only have 7 minutes left in it. Okay, I'm going to bring someone up on stage.
No one can hear you, Dumpling. Rip. All right, we're gonna moderate ourselves for a sec. Maybe Mod, you can hop back up here and help us out.
Okay, I'm back.
Syncubate had a question. Dumpling, you want to take it from here, or?
Sure. Building on Hammer's question about scaling down the weather, if the prior podline is scaled down, is there even a need to scale down the prior podline if the goal is to preserve Beanstalk's credit history? I'm going to trim it there, Sync. I think that's a good.
Well, the short answer is not willing to take a haircut is a very aggressive offer if that's the position that Beanstalk wants to take to investors. Agree that fundamentally it doesn't really change the structure of Beanstalk at a macro perspective, but it does dramatically change the value proposition of capital that's participating in the fundraiser, particularly the earlier participants. So if you're the first $1 million or the 10th $1 million and you don't know if there's any money coming in behind you, the idea that you're now bailing out a 700 million pod line is very unattractive. So the haircut is really what makes it an attractive offer, independent of how long the pod line is.
Okay, and Phoenix just DM'd me a question. Hi guys, I'm relatively new to Beanstalk and doing some work in anticipation of the barn raise. So forgive me for asking a basic question. Where does the equity value come from? Like for example, Circle generates net interest margin. What's the comparable value generation function in Beanstalk?
So, don't think there's an exact parallel between a traditional business, but the interest in the protocol is paid out from bean seniorage. So anytime the bean supply increases, the beans are distributed to pod holders and to stockholders. And so stock is, a little bit of a play on words because of how it does resemble stock. And stock receives interest in the form of bean seniorage when the bean supply increases.
Sorry, Publius. I was in the design channel. I just realized the dumpling isn't able to take on questions.
He's back. Don't worry, Mod.
I'm back. It was a quick AirPod switch. Okay.
Mod always comes to the rescue, ladies and gentlemen.
Mod does come to the rescue. Why 1/3 mint split? Why not increase the barn raise split to incentivize barn raise funding?
Well, there's no reason, ultimately. And as we've said before, the 1/3, 1/3, 1/3 split is somewhat arbitrary. You can offer additional priority to the barn raised pod line, but don't necessarily think that, at the end of the day, this is a negotiation between Beanstalk and the creditors that are going to come and lend to the barn raise and think, it's like, well, there will be this haircut in the pod line, but there will be a 1/3, 1/3, 1/3 split with no additional priority. So some stuff is additional and some stuff is, it's a give and take, if you will.
Okay, this might be the last question. What about incorporating new soil purchases in making investors whole? Instead of letting bots buy all the soil, shave off some of the new beans minted each period and use that to buy pods directly in a segregated account.
I don't understand.
Yeah, Bean might have to.
Reading. I don't understand. I'm sorry. Yeah, I really don't understand.
Okay, well, we can't end on that one. We got to get one more question, guys.
Chat's going off. I guess. Yeah.
We should mention the Bankless AMA tomorrow, 3 p.m. Eastern on their Discord. Okay, we could Hammer is building off of Sync's question. How about the barn raise plan works in an incomplete sale situation? At a certain point, it would feel like much more than a haircut. If we're scaled down to a small market cap, say 10 million, and then the rocket ship takes off again to 100 million and beyond, our dilution in that scenario seems to be severe, and our balance recovery very incomplete. Is there any thought to thresholds beyond which additional pods or beans are awarded to all those who have lost funds or liquidity? Clearly, a $700 million obligation at a tiny market cap does seem untenable. But as it grows again, its ability to repay those obligations becomes more and more doable. Since Beanstalk is fundamentally a machine that repays debts when it can, how can we do better to ensure that in a down barn raise and a subsequent growth scenario, we come closer to making those investors whole?
So it's tough, right? Ultimately, when it's the same question Ahuja was asking about priority. It's like, why not just move the current pod line to $1 billion in line and say going forward, Beanstalk's going to start with a new pod line, and whenever it reaches a 2 billion supply, it'll start paying off this old pod line. Like, there's a million different ways to slice it, So at the end of the day, I think it's just at a high level, the DAO needs to come to some sort of consensus as to what are the right trade-offs and how much of a haircut is everyone willing to take. I think the haircut is a very compelling, aggressive offer for Beanstalk to be making to potential creditors, because again, that first creditor or that 10 millionth creditor or the last creditor, they should all feel good about coming in and providing capital, if that makes sense. So in short, there's no particular reason not to do that, other than at the margin think being unwilling to cut any of the debt is a very tough bargain to drive.
Yeah, that makes sense. Okay, well, an hour we said, an hour we spent. Thanks everyone for coming by. There will be that bankless AMA. We'll also likely do one on Sunday. Publius, any last thoughts?
No, just want to say thank you everyone for coming. Thanks Dumpling for leading us once again, and we'll talk again tomorrow, everybody.